In the currency quadrant, the Japanese yen is looking weaker and weaker, 2 consecutive weeks lower now, and it is rolling over. It's losing momentum and rolling negative as the flight to quality, I should say, those are two different things. The flight to quality in the Japanese yen starts to erode as optimism about a U.S.-China trade we've got a ceasefire, but a trade deal potentially happening. That's pushing the yen into a negative stance. Now, overall, it is only the second consecutive week, but we have 4 consecutive days lower, and this particular week is the worst week we've seen in terms of performance against the U.S. dollar for the Japanese yen since September 24th of last year. Now, stocks are weak in Japan as well, and several stocks are suffering from the weak currencies as they report earnings. They're reporting and blaming that the weaker currency hurt their exports, hurt the value in terms of the conversion of their exports, and that hurt their P&L. Now, this might bring some sort of bottom feeders in to buy those stocks as the Japanese yen starts to weaken, but that will not add to the idea that the BOJ could remove accommodation, and that should keep the currency even weaker than that. So overall, the weakness in those stocks could potentially help the equity markets in Japan, but won't lend any sort of strength to the Japanese yen moving forward. And then, of course, the dollar's been stronger, so that doesn't help at all in terms of yen bulls. The dollar had its best week since December 10th of last year. Very strong, 4 consecutive sessions higher, pretty good week, as I mentioned, and that obviously, given the heavy weighting in the dollar index versus the Japanese yen, has assisted in pushing that Japanese yen lower to its worst week since September of last year.